name's Dave Garner. I'm a tech partner at TLT. You just heard a little bit about us on the screen there. And I head up our FinTech practice. I'm very happy to be on stage here with a distinguished panel of guests to tell you a bit about what's going on in this space. I've also been here earlier on today and very happy to see that quite a lot of the themes that we'll cover in this discussion have already been touched upon. We'll try not to tread on any toes in terms of what's gone before, but what we're going to try and cover today is something that should be of interest to people both within the FS space and beyond, around inclusivity, around effective regulation and policy making, and around how we can collaborate between FinTech providers and regulated institutions to deliver better outcomes. If anyone's got any questions, by all means, fire them through on Slido, and if we have time at the end, we will try to cover them. In order to save time, because I know that's always Sam's main bugbear in these events, I thought I'd combine an introduction to each of my guests with a first question for each of them around that topic of financial inclusion and inclusivity. And I was actually going to start with Lee. I wonder, Lee, if you could tell us a bit about yourself, what you do at Monevo, and then some of the work you've been doing to interrogate your data and some stats you pulled out around your customers.
Yeah, sure. Thanks, Dave. So I'm Lee Stretton, Chief Innovation Officer at Monevo. I'll give a bit of background about Monevo, talk about myself, and then some data and stats and facts. So Monevo is a fintech that operates globally with the aim of helping people gain access to credit. So be that credit card, loan, car finance, etc. And we look to find a product that best meets the customer's needs and equally one that they are eligible for. We process over 2 million credit applications a month, so as you can imagine from that, we've got a large volume of data that we can really glean some interesting stats and insights from. We also power a lot of lenders' own eligibility decisions. We've got a platform that we've built internally that takes application data, credit reference agency data, open banking data, and we can overlay AI onto it as well to provide outcomes where we can match a customer to the product that they would best be suited for. As for myself, I've had several leadership roles in FinTech over the last 16 years, from IT director, CTO, COO, managing director, until I landed at Monevo about 2.5 years ago now. Prior to that, I was the MD at UK savings and deposits platform YZen. So, inclusivity. It's quite interesting when you look at our stats that if you think about the upcoming generation, Generation Z, they are really woefully underserved at the moment. So if I look at combination millennials and Generation X, generally, for every application we get, or for every 100 applications, between 50 and 60 will result in them being made an offer for a credit-based product. Whereas Generation Z, that is actually sub 10%. And I'm obviously discounting those that are under 18 as well, so we're not including those in the 10%, or in the 90% that are knocked out. And that rate's actually decreasing as well, so obviously there's a cost of living crisis at the moment, and over the course of the last 12 months, we've actually seen that offer rate drop from around 9% to under 8%, so that's a downward trend as well. And obviously Generation Z will be, in the future, the majority of people that are working, so that's quite a worrying start.
Yeah, for sure.
We reckon in the UK, and depending on which credit reference agency you speak to, the figures vary slightly, but they broadly form the same-ish number. There's around 11 million people that are underserved credit, and that's a combination of people with poor credit, which accounts for about 6 of the 11 million, and people with what we would class as a thin credit profile. So that's around 5 million of the 11 million. And a thin credit profile generally means that there isn't enough data that the credit reference agencies have on somebody to make a decision on whether to offer them a lending product. So it could just be somebody's left school, college, university, they've been living at home with the parents, they have no debt, and equally, because they've had no debt, lenders don't know how well they will repay the debt. So some really interesting figures. Well, I find them interesting. Some interesting figures there, but obviously, you know, there's things that need to be done about that. And I certainly feel with the state of the education system at the minute, you know, we talk about fronted adverbials. I'm going back to my COVID days when I was teaching my 9-year-old what a fronted adverbial was, thinking, what on earth is this? I had to teach myself as well. But he has no idea how to manage money. And I think that's a sad state to be in at the moment.
Yeah, and I think that's probably a good point to perhaps bring in Natalie as well, because there's definitely, what you've talked about there is really the importance of financial decisions in people's lives and the importance of financial understanding and education. So I guess zooming out from some of those specific stats around Monevo's business, it'd be useful to talk about how we see those issues playing out from a wider perspective, Natalie. And I was struck by what Sherelle said from Manchester City Council in the first address this morning, when she talked about it's not thinking about what tech do we want, it's what society do we want. And I guess we could replay that. It's not what FinTech gizmo do we want, it's actually what is that going to do to try and achieve some of these objectives. So I wonder if I could ask you to say a bit about yourself, for those who weren't here for your first appearance on stage earlier on, and then
wear
talk
many
about
hats.
Yeah, exactly.
Yes. Hi, everybody. I'm Natalie Jameson, founder of YZen AI. I'm, I guess, a deal maker turned DEI founder. I started my career in mergers and executions, doing M&A finance for Barclays, ABN, RBS, large, global banks, and rose my career through the ranks in the boys' club. And it does suffer with a diversity and an inclusion issue. I mean, when we look at the pay gaps for all industries, we're talking about a sort of 14% gender pay gap. It's 28% in financial services. The bonus gap is about 40%. And, they've got a serious issue around the impact of diversity. And I want to say, instead of inclusion, I want to say diversity and influence, because it's about the decision deficit that happens within those realms and the impact of that on a cycle of, busts and public bailouts. So what is happening internally around the inclusion and the risk management? So I think it's a very interesting time, particularly when we look at the FCA and what they're doing. They're starting to look at the impact of culture and inclusion on risk, and that is becoming a sort of a valid operational risk now. So what we do at YZen is we're trying to help. We'll talk a little bit about the cognitive load of the compliance, because when you work in financial services, there's lots of immovable objects to do your job around. Everything you do is a risk, a rule, a process, etc. And what we're trying to do at YZen is to embed that policy and those regulations and rules into your everyday kind of workflow.
Yep.
Yeah.
Fantastic. And it really strikes me that what you're talking about there is an angle on this that's sometimes overlooked, because people focus very much when they're talking about these tools and new products. You look at the data and you look at how the AI is making a decision or is being taught to make a decision, and that's obviously important. We shouldn't overlook that. But if that product is being created by a coding team from a certain demographic, is being managed by a management team which doesn't have a broad range of perspectives, then there's going to be a huge range of blind spots, and you're not going to get the outputs that will bring in these kind of inclusivity features. So I think that's a really good point.
Yeah, I think also, I mean, the whole sector is facing a sort of 1.3 trillion output gap, because they've got a 10,000 worker shortfall by 2030. And so we need to have inclusive workforce, and we need to be able to attract and retain this talent, and that's part of the answer as well. So.
Absolutely. Thank you very much. And last but not least, Tom, if I could perhaps just step back a second and talk about some of the ways in which technology can be used to solve some of these issues that we've been talking about, and how your products at AccessPay expose and allow your customers to analyse and manage the information that they hold, but often they have manual processes or they have inefficient systems, which means they can't really understand what it is they've got in their hands, and then what you do to try and bridge that gap for your customers.
Thanks, Dave. Hi, everyone. My name's Tom Livock. I'm from AccessPay. AccessPay, for those of you who don't know us, are a Manchester, 2012 startup company. So we've been around for coming up for 14 years. Where we provide a connectivity for our corporate customers connecting into their banks, and they're either processing payments, so payroll, supplier payments, treasury, expenses, and they're delivering those payments to their bank, and they're then trying to get the statement data coming back from the bank to be able to reconcile those transactions and update their back office systems and work out what their liquidity is within the organization. So that's what we do as a business, and the reason why we do it is very simple. So those back office systems don't connect to the banks, so the likes of SAP, Microsoft, Sage, you name it, there are many of them, don't connect to the banks, and the reverse is also true. So the banks don't connect to those back office systems. So this idea of how do we then solve it as an organization is, and traditionally it's been, okay, so we're going to use a bank portal to log into that banking system, take the file, take the payment file out from that back office system and upload it manually. And so that brings around the whole issues of, you've got an efficiency issue, a manual process there. But in terms of sort of today's conversation, there are lots of other challenges around that manual efficiency process. The first one is one that was touched on earlier, which is human error. So unfortunately, we're all human, and at some point, a decimal point is going to put in the wrong place, or a name is going to spell incorrectly. And then the next concern is then security and risk and fraud. And this was talked about earlier around the whole issue of how do I make sure my system is secure? How do I make sure that there isn't an external fraud attack, or even worse, an internal fraud attack, and somebody's colluded in the business and actually they're able to process a payment fraudulently. And those are all very significant issues that can be solved today. They're not insolvable. The thing that we're seeing is around audit and control. And maybe you're familiar with UK SOX, which is going to come out in 2024. For those organizations that offer financial services already, they're already heavily regulated by the FCA, but UK SOX is going to affect most organizations in the UK from 2024. And turning to inclusion, really, we're not a B2C provider. So unlike some of the other applications and some of the companies around today, we're a B2B provider. So we're supporting our financial services companies, whether they're lenders, whether they're banks or otherwise, and we're helping them provide that level of automation. And really, from an inclusivity point of view, it's how do we make that business more efficient by providing this connectivity? And then secondly, how do we make sure they're regulated and provide that audit and controls?
Thank you very much. And that segues very nicely into our second topic area around regulation, which we've already touched on from a few different perspectives. And I think very often technology finds itself in the spotlight in terms of regulation when we look at general regulatory instruments like GDPR, but also more specific financial services changes like the existing regulation around audit and compliance and UK SOX coming down the track, but also when we think about the FCA's consumer duty, which for anyone who's fortunate enough not to have heard of that, who's outside of this particular sphere, is a huge change that is being pushed forward by the FCA to make sure that financial services businesses put customers and consumers at the heart of their decision making and ensure that products are fit for purpose, they provide fair value, they're targeted at the right customer base, and that they are monitored and managed and course corrected where things go wrong, which wasn't that quick to say, but was fairly quick to say in a few seconds. But in actual fact, embedding that into an organisation, particularly a large organisation that's already heavily regulated, is an absolute mountain to climb for people who are on the receiving end of those regulations. And it's important they do it, and it's important that those outcomes are achieved. But I think it's quite easy to underestimate the challenge and what you talked about before, Natalie, about the cognitive compliance load on those people who need to try and get there. So I wonder if I could ask Lee perhaps first of all about how you've managed compliance from a Monevo perspective, maybe a bit about the challenges, but also some positivity around how technology can also be a bit of an enabler here and solve some of these problems, as well as present a bit of a headache at times.
Yeah, I mean, most of our compliance challenges are around the financial promotions. We're obviously not the ultimate credit provider to the consumer. And working in a business, so we provide decisioning for over 150 lenders globally. So you can imagine if you look at it from a commercial point of view, some are on slightly more favourable commercial terms than others. So would you put those first on the results page? Absolutely not. So our results pages are absolutely driven by best outcomes for the consumer. Everything's fair, transparent and not misleading. And equally, we monitor the underlying performance of the credit providers to make sure that if they're giving pre-approvals or very good eligibility scores for products, that they are generally hitting that, so there's no additional checks going on in the background, and it's in line with all of the other providers. So we manage our consumer duty both internally and upwards towards the credit providers as well, to make sure that, well, we do give the consumers the best possible outcome that they can ask for. So it absolutely can't be about the commercials.
Yeah, absolutely. And Tom, I think we've spoken a bit about open banking before as well, and I guess that's something that has got the potential to be quite transformative and has already started to deliver in particularly the consumer space. And we had our Pro Manchester FinTech lunch a few weeks back, where we had Charlotte Cresswell from the Centre for Financial Innovation and Technology talking about their first coalition around open finance, building on those good foundations that have been built. So that's something that is clearly a massive opportunity, but still, I guess, not fully realised as a solution, perhaps from your perspective as a business-to-business operator.
Yeah. So open banking back in 2017, we thought, hallelujah, this is the point where we can finally connect our corporate customers to the banks using an open banking API, and it's freely available, and this is a game changer. Unfortunately, David, as you said, on the consumer side, that's absolutely been the case for consumers. You and I have really benefited from open banking, and we probably use it where we don't even know we're using open banking. But on the corporate side, it's unfortunately, there have been a number of challenges, which is the reason why it hasn't yet taken off in the corporate space. As you mentioned, Dave, we expect those challenges to be addressed pretty soon. There are two fundamental challenges when it comes from a business point of view trying to use open banking. The first is most businesses are wanting to make multiple payments. So if you think about you or I, what we're doing using open banking, we're making singular payments most of the time. But in the corporate world, whether it's payroll, supplier payments, or expenses or something else, normally it's a payment file with multiple transactions in that file. And open banking didn't support bulk file transaction up until very recently. And so that was a real blocker for open banking being supported by businesses and AccessPay actually being able to adopt it. The second is that it required authentication. So what we really want is straight through processing. So the payment comes in and we can deliver it straight out to the bank and then automatically receive transaction information coming back. And open banking doesn't allow that to happen. It requires an authentication process. So from a corporate's point of view, it means that the cashier or the finance person is having to sign every single transaction, which, again, it goes back to efficiency point of view, it's not an efficient process. So, but the good news is it's changing, and we expect that actually open banking will, hopefully, at some point very soon, we'll be able to realize what we want for our corporate customers.
Yep, and I think that undoubtedly it's been the case that the challenge of delivering the open banking implementation entity roadmap was underestimated quite significantly in terms of its required timescales and complexity. So it's taken a lot longer to reach the stage where it's of benefit to you and to others who are looking for more rich functionality. but it is getting there, and I think the CFIT focus as well will be quite interesting to see how that can actually start to build a much broader consensus and adoption around open finance. And in doing that, I suppose, leads us on to our final theme, which is around how entities within financial services and beyond need to collaborate and to calibrate in order to successfully work together. That's true, I guess, in any industry, but particularly in the way financial services is structured, where you have, for example, in the payment space, acquirers, issuers, payment schemes, e-money providers; in the mortgage space, brokers, platforms, lenders, services. There's always a need to work together, and when we look at FinTech solutions and the work that I do, invariably there's two, or quite frequently more than two, parties that need to get their heads together and deliver something. And so it's quite heartening to hear the keynote earlier on about startups and how the important thing to do is to think about your focus on your minimum viable product and how you can actually deliver something together with another party that's really tightly focused and defined. And I guess that minimum viable product was flashed upon the screen several times. And I was going to ask Lee to talk a little bit about that as well, from your long and hard experience around working with perhaps larger institutional lenders and other big organisations, when you're generally you've been not small, but the smaller player in some of those conversations, and how you've navigated those challenges.
Yeah, that's an interesting problem you've raised, and I think one of my first comments would be that I really dislike the term minimal viable product. I prefer the term minimal lovable product. I've seen an awful lot of MVPs in the past fail because although they do solve the problem, when you put them in the hands of the consumer or the end user, they're actually pretty awful. So for me, just make it a little bit better and make it something that looks, feels and tastes nice. And you'll get there with that sort of mentality, and you've got a better chance of success. But in answer to the original question, before I went on my mini rant, I've done this several times over the past 16 years, and if I look at where I was with YZen prior to here, we'd delivered a tech stack, we'd got a product, we were ready to go. We just needed some banks on board to actually give the deposit products. And we had great processes, great procedures. There's always a large hurdle to get over when you're dealing with larger banks, not least from a compliance point of view, also due diligence, information security, and you've got to think about everything to get that on board and over the line. But then the key thing is actually kicking off and starting. So there's been a few different processes I've tried, both at Monevo and at YZen, where we've done a try before you buy, like get 3 months free, because we've been really incredibly positive that the product will do what it says and it will work. And by doing that, you're giving the banks a sort of a no-risk opportunity to participate. There's been reduced commercials, or really a lot of the time it is just about the proposition and making sure that you've got something compelling and lovable, not just viable, that will kick on and really add value to their business.
Yep, absolutely. I think when we spoke prior to this session, we talked about this common metaphor of a supertanker and a speedboat, which isn't always quite right, but does have a certain resonance when you look at some of the larger institutions and the way in which they do business. They're very security conscious, they're very compliance conscious, versus the FinTech speedboat that is basically zipping around and going in all sorts of different directions and finding new things, trying things out, backing up. And I guess this is something, Natalie, we spoke about as well. Have you got any tips for the audience, which I guess may apply in the financial services setting, but also beyond, whenever there's a speedboat and a tanker kind of scenario? How do we kind of navigate that?
Yeah, I think if you've got aspirations to work with enterprise or government or whatever, I always say have an uncomfortably narrow niche, solve a small problem in the big landscape. So, get a PhD in that problem and then be the one. So it's easy for you to go in and pitch to a specific stakeholder within that universe, which there are many stakeholders, and the less you can have at the table, the better. And then you can have a small pilot. So I would say from you know, a practical point of view of having a minimal, lovable product is to solve a problem and solve it really well.
Yeah, yeah, that makes a lot of sense. And again, chimes in with what Lee was saying and what we heard in the startup keynote earlier on. And I suppose probably my role here to do a bit of therapy on myself around how I spend a lot of time working through those compliance questionnaires, working through contracts and schedules and appendices that either my client as a bank is pushing across the table towards the FinTech, or the FinTech is being drowned in as the bank pushes them across the table towards them. And in terms of how we get through that, some of it is about a bit of pragmatism, understanding what are your red lines versus what's just red tape. How do we try and focus on a single problem to solve, to your point, Natalie, so that some of that perhaps can be swept away. It's not relevant for today. It might be for the next product, but we can cut out a whole load of process because we're going to focus on this one thing. For example, we don't need to do this in such a way that the FinTech processes personal data. So all the DP stuff, whilst it might not be able to be deleted, can be condensed from 100 pages to 2 pages, whatever it may be. So I think that kind of focus and pragmatism is important, and that then dovetails with making it easier to sponsor projects from a corporate perspective, from a management perspective, being able to actually push forward, this is this one thing that we're doing that will really solve a problem. And that goes for the senior leaders on either side, and that drives better behaviours from the advisors and from the people who are sometimes a bit lost in the weeds of the 100-page compliance check and see their role as just getting to question 100, when actually can we delete 50 of the questions because they're not relevant. And if you can focus in that way, then you increase your chances of actually achieving a good outcome that everyone's happy with. People haven't completely fallen out by the time you actually put a signature on the deal. And also it reduces the chances that things fall down after signature, because it's not unheard of in my experience that you can spend either a short or more often a long period of time in that kind of due diligence, compliance, negotiation phase. And then you reach contract signature, and actually what happens is you find you've tried to bite off more than you can chew. There isn't one minimum viable product. There's 20 different things we could do, and people lose focus. People find it's harder to onboard than they thought it was. There's more configuration needs to be done. So it's quite easy to actually fall down after you think you've done the hard work and got the deal done. So for all those reasons, I think Rob Bowley's chat earlier on was really good in kind of encouraging focus on one particular pain point and knowing your customer and what you need to solve for. We have had a question on Slido, which I'll just cover briefly before we close, which is asking about the fact we haven't covered crypto, and we spent a bit of time on the panel last year talking about that. Part of the reason for that is we simply didn't have time, so we picked our battles. Part of it is also that we wanted to focus on some of the experience and the areas of expertise of the panel that we've got today. But also I think it's fair to say from a crypto perspective, there's been quite a few headwinds in that space. And so from the perspective of businesses operating day to day, it's possibly less of an area of focus than it seemed like it would be 12 months ago. We haven't covered everything in the FinTech space in the course of today. What I hope we've demonstrated is there's quite a bit of challenge out there. Things aren't perfect, but when we look at the businesses in Manchester and beyond, and the areas in which we've got to collaborate, to discuss, and to understand how we can create new solutions, there's a lot of opportunity, a lot of positivity. We can continue to have Manchester rightly wearing the crown as the best FinTech city outside of London. And if we work together and do things right, then FinTech has got the power to really drive better outcomes, as well as keeping you compliant from a regulatory perspective and keeping the compliance officers, the lawyers happy as well, which will be a good space to get to. So thank you very much for your attention this afternoon. If we could ask you to give a big hand to the panel. And see you soon.
Well done, Dave.
I'll let you go over just a couple of minutes there, Dave, you know.
30 seconds.
30 seconds. Oh, wow. On my watch, it was, anyway, perfect timing. It's all good. It's all good.